Trading psychology was a lie until I learned to think like a sniper. The cursor hovered over the sell button like a trembling trigger finger. On my TradingView chart, the 5-minute candlesticks pulsed green, then red. A heart monitor for a position I didn't deserve to be in. Level 2 flickered bids stepping down, offers stacking like a firing squad. My stop loss was set, then nudged, then deleted, then redesigned in my head as just a mental stop. Somewhere inside the platform, the sound effect for margin warnings waited like a bark. I told myself I needed one more candle to confirm, one more RSI tick, one more validator from a trader on X. I wasn't trading, I was pleading. And then it hit me. My so-called trading psychology wasn't discipline at all. It was superstition dressed up as rules. I wasn't a professional. I was a tourist with a weapon. And that's when I learned to think like a sniper. Here's what nobody tells you when you open the platform. You can memorize every candlestick shape, every moving average crossover, every pullback nuance and still be crushed by your own brain at the exact moment profit requires a clear signal and a clean trigger. Most traders lose money. Not financial advice, obviously, and past patterns don't guarantee the future. But there's a reason blow-ups repeat like clockwork. Our minds are wired to protect our egos, not our P&L. We see patterns where randomness lives. We confuse luck for skill on green days, and we rewrite our rules when adrenaline drowns our breath. A sniper mindset isn't about taking fewer trades because it sounds disciplined. It's about shaping your perception so the market cannot bait your biology into friendly fire. Let's strip away the lies. The first lie is the entry hesitation paralysis. You know the setup. Price pulls back into a prior session's V-day up. Volume profile shows a low volume node below. We're forming higher lows, and the risk-reward is skewed 2-1 if you enter at the wick. But your finger freezes. Why? Because dopamine has conditioned your brain to prefer the fantasy of a perfect entry over the reality of a probable entry. The fantasy is painless, infinite upside, no accountability. The probable entry has grit. It comes with slippage, partial fills, a wick that tags your stop before the move begins. So you wait for certainty. Certainty never comes. The candle leaves the station. Now the cortisol spike arrives, and you chase at a worse price, convincing yourself the extra confirmation was smart. You just paid a premium for fear. The second lie is exit greed extension. Your plan said to take partial at the prior high and trail under the 5-minute higher low. But as the screen floods green, serotonin whispers that you're finally getting it. You tighten your attention, loosen your rules, and ignore the rising ask imbalance because letting go of a winner hurts your identity as a new you. Then one aggressive market sell sweeps the bid, your level 2 turns cold, and your unrealized P&L vanishes like fog. You didn't ride your winner, you rode your chemistry. The third lie is stop-loss removal syndrome. You set the stop where price action proves you wrong. Then you remove it because being wrong proves you wrong. That's not risk management, that's ego preservation. You didn't want a risk reward, you wanted a guarantee. Snipers don't move the target closer when they miss. They adjust their body, their breath, their data. If your stop is consistently just a bit lower, then your system is lying to you about structure, or you're lying to yourself about discipline. Revenge trading loops, overtrading compulsion, chart pattern hallucination. They're all the same trap at different time frames. The trap is believing more analysis makes you safer. The paradox is brutal. The more analysis you do, the more your brain convinces itself you've earned certainty, and the more violent your reaction when randomness does what randomness does. Perfect setups fail most often because the crowd piles in and the order book tips. The best trades often feel uncomfortable because you're early, not wrong, and your nervous system hates early more than it hates loss. Tighter stops frequently create bigger losses because your anxiety forces re-entry at worse prices. More screens, more feeds, more noise, less clarity. Mirror neurons copy other traders' conviction on social feeds, and suddenly your plan becomes an echo of someone else's dopamine spike. So how did the sniper mindset replace the lies? It started when I stopped treating trades like opportunities and started treating them like missions. Missions have a brief, boundaries, contingencies, and a single metric: execution under uncertainty. I built the mission on a skeleton of probability, thinking, never certainty. And I considered the enemy to be my physiology during volatility. Markets are an auction. The tape is the terrain. My job was to engage only when the terrain gave me a position edge. not an ego bath. That's where Marcus enters. Marcus trades like a risk manager. His favourite line is, "Risk defines the trade." On his desk, 3 monitors, not 9. TradingView on the left for higher time frame structure. Daily and 4-hour swing map with weekly levels and 20/50 moving averages to outline momentum regime. Center screen, a clean 5-minute and 1-minute paired with VWAP, a 30-minute volume profile, and a delta footprint view for order flow context. Right screen level 2, and a minimalist journal panel he built in Notion. He calls it the scope. If a tool doesn't help him see location, flow, or risk quickly, it's gone. More screens, less clarity. He says, and he means it. Marcus arrives 90 minutes before the open. He tags the overnight high-low, previous day's high-low, gaps, and any place where volume profile shows thin air zones where price often accelerates. He writes 3 if-then statements, never more. If we open above prior day high and hold VWAP on first pullback with decreasing negative delta, I take the first higher low long, risk under the structure, partials at measured move. If we reject overnight high with heavy offer absorption and fail back under VWAP, I short the first lower high into the volume shelf, risk above the absorption. If we chop inside prior value with shrinking volume, I don't trade until an imbalance builds. That's it. No maybe, no feels like. He makes the mission simple enough that adrenaline can't confuse it. Then comes the breath. Marcus places both feet on the ground, inhales 4 counts, holds 4, exhales 6, 10 cycles. He names his chemistry out loud before the bell. Dopamine. You'll get your hit when you log the setup, not when you fantasize about it. Cortisol. You keep me alive. Today you keep me patient. Adrenaline. Save it for the trigger, not the scroll. Serotonin. You don't validate me, my process does. He disarms the chemical hijack by giving it a job. Once the bell rings, Marcus stalks location. He doesn't chase breakouts, he chases asymmetry. If the market hands him a first pullback into VWAP with trap shorts under the wick, he enters on the reclaim, not on the runaway. Entry is the place where his invalidation is near and obvious, so that his stop is about being wrong, not being scared. He sizes by risk, not conviction. If the stop is 4 ticks, the size is higher. If the stop is 15 ticks, the size is smaller. Position sizing is his oxygen. If price takes his breath away, his size is wrong. He logs every mission in the scope. Time, setup name, entry docs exit, stop rationale, risk chalks reward planned versus realized, and one sentence. What would a sniper have done? A sniper would have passed on the mid-range chop. A sniper would have waited for the pullback that made the stop obvious. A sniper would have taken the partial because the mission brief said partial, not because the candle turned red. And if the mission fails, a sniper exfiltrates immediately. No revenge, no one more shot. Risk management is survival. The rewiring required more than breath and briefs. It required breaking the neural loop that told me more analysis equals more edge. Marcus taught me to pre-commit, in writing, to trade fewer setups more often. He keeps a laminated card taped to the bezel, 2 setups, 3 conditions, 1 kill. The 2 setups were a first pullback continuation and a failed breakout reversal. The 3 conditions were location at a key level, previous day's high-low, VWAP, or a volume shelf, order flow confirmation, delta shift, absorption initiative evidence on the footprint, and a clear structural stop, wick low high of the signal candle. 1 kill meant 1 trade per setup per session, unless the first was a scratch that never violated structure. If the trade triggered and lost, the mission was complete. That single constraint dissolved my overtrading compulsion. Boredom returned, briefly, then profitability replaced it. We also constructed what he called anti-lies. For entry hesitation paralysis, the anti-lie was a 2-step trigger. Place a limit order at the structure with a bracketed stop and first target. No more I'll click when it looks right. For exit greed extension, the anti-lie was a non-negotiable, partial 1/3 off, at 1R move stop to break even only if the footprint kept bidding. Otherwise keep the stop where structure says. For stop-loss removal syndrome, the anti-lie was a burn ritual. If you move a stop once, you kill the trade immediately and tag the journal with SLS1. 3 SLS1s in a week. Size halves next week. The consequences rewired the impulse faster than any motivational quote. We used neuroscience friction to our advantage. Adrenaline wanted a quick hit, so we gave it microtasks. Mark levels, write if-thens, call out the first imbalance in the opening 3 minutes. Dopamine wanted novelty, so we gave it streaks that were process-based. 10 sessions without moving a stop. 5 sessions with 3 pre-market briefs completed. 20 trades tagged with the same setup name and clean screenshots. Serotonin craved status, so we gave it private wins, a green square on the calendar. For every day the rules were followed, regardless of P&L. It is stunning what happens to your equity curve when your brain's reward system is pointed at execution, not outcome. There was one more paradox to embrace. The more I chased comfort, the less I found consistency. The best trades still felt uncomfortable. Taking the first pullback into support when everyone on social feeds screamed lower felt like stepping into a crosswind. Passing on a perfect-looking breakout because the order flow didn't confirm felt like cowardice until it saved me, over and over. The sniper doesn't need to feel good. The sniper needs the wind, the range, and the breath to line up. Probability thinking demands the humility to be wrong often, and the ferocity to act decisively when your edge is there. What about swing trades and crypto or forex? The sniper mindset scales across timeframes. On the 4-hour chart, Marcus treats weekly levels like ridgelines. He plots support resistance where monthly candlesticks left unfilled imbalances, overlays a 2050 moving average regime to identify whether pullbacks are favours or traps, and watches RSI divergence only as a secondary tell when price is at location. He sizes around the ATR, sets the stop where structure is broken, not at a round number, and uses alerts instead of screens to reduce mirror neuron contagion from other traders' emotions. He adds only on fresh structure breaks and never widens a swing stop because news candles appeared. News is wind, he says, structure is terrain. Naturally, there are days the terrain ambushes you. A liquidity vacuum rips your stop, and slippage doubles the loss you planned. You will still feel your jaw tighten as cortisol bites. You will still want to get it back. That's why the mission includes an exfiltration rule. 2 losses per session, or 1 broken rule ends the day. The journal gets the truth. Most traders lose money because they extend their trading day when their edge has left the building. They crave relief, not returns. Snipers leave when the terrain turns to fog. You'll ask, what about statistics? The most useful number in my transformation wasn't win rate, it was rule-adherence rate. When I crossed 85% rule adherence over 30 sessions, my equity curve smoothed, even though my win rate stayed in the 45-55% band. Why? Because the losers got small and the winners got harvested as planned. Past patterns don't guarantee the future, but I can guarantee this. If your rule adherence remains low, your outliers will define you. And most outliers in real trading are negative. Did we need a checklist? Absolutely. Before the open, sleep 7+, walk 10 minutes, hydration, 3-line brief. Mark levels, define 2 setups, write 3 if-thens. After the open, 2 minutes of breath if heart rate spikes. First imbalance noted aloud. First 2 15-minute candles screenshot for journal. During trade, enter on location. Pulse confirmation, stop placed instantly. Partial at plan, no chat feeds. After exit, 2 lines what the market was trying to do, what I did. End of day, 3 screenshots, 1 process metric, 1 anti-lie reviewed. The checklist is boring by design. Boredom is the antidote to compulsion. And where does thinking like a sniper leave your personality? You don't have to become a robot, you have to become an operator. Operators feel fear and still execute because they trust the brief more than the body. They choose fewer shots because their edge is asymmetry, not adrenaline. They don't outlaw emotion, they out-organize it. Picture what your trading looks like 6 months from now if you adopt this. The pre-market routine is a ritual you enjoy, not a task you endure. You approach the open with a calm pulse because your job isn't to predict, it's to recognize. Your entries look late to gamblers and early to tourists, which is how you know they're probably right. Your stops are hit often, and you barely care because each was where the idea died, not where your ego did. Your exits are split between mechanical partials and a trailing structure that respects what the auction is doing, not what you want. You take days without trades and feel proud, not deprived. You can walk away from a session with a red P&L and still colour your calendar green because risk management is survival. You don't define a good day by money, you define it by mission. Let me also say the quiet parts out loud. You will still have slumps. You will still wake up after 3 losing days and feel the edge of panic cut your optimism. That is when process keeps you alive. The sniper mindset saves you not because it's cool, but because it's narrow. Narrow is how we keep our brains from burning our accounts. Trading psychology was a lie when it promised confidence without constraints, flow without friction, intuition without iteration. The truth is uglier and freer. You will never be confident enough to trade well. You must be constrained enough to trade well. The constraints build the confidence. I learned probability thinking from those who preach it for a reason. Every trade is a unique outcome inside a familiar structure. I learned that beliefs drive behavior and that the beliefs which keep you polite in society, avoid discomfort, seek approval, protect your image, will get you executed in markets. I learned that performance improves not by suppressing emotion, but by training it, repurposing dopamine, cortisol, and adrenaline toward the exact actions that compound edge. I learned that the market is an auction, not a mirror, and my job is to read the crowd's urgency, not my own hopes. And I learned that the stories of the best traders are simply this: 1,000 small exfiltrations from ego to process. So when my cursor hovers over the button now, it isn't a trembling trigger finger. It's a breath, a brief, and a boundary. If this is the mission, I enter. If this is not the mission, I don't. If I'm wrong, the stop pays my tuition. If I'm right, the partials feed my account, not my self-image. And when the bell ends, I am done. I live to trade another mission. That is how a tourist becomes a professional. That is how you think like a sniper.